And if that can't be paid back, you devalue that note to nothing and you throw it out. But that's what most of the dollar is. It's IOU notes. IOU notes of what? Of what, for God's sake? It's IOU notes of the original gold that the dollar started with. That's what it is. So that's where the dollar's most of its value is. It's in the IOU note that is still tethered to gold at 42.
Wednesday, February 19th, 2025, Maneco 64, home of alternative economics and contrarian views. Today I've got Rafi Faber of the Endgame Investor YouTube channel. You should really check his channel out. I highly recommend you subscribe to it. You can just type Rafi Faber or Endgame Investor. Rafi, welcome.
Thanks for having me, Mario.
Yeah, thanks for coming, Rafi. And I watched, well, actually, my wife watched your video yesterday about $17,000 gold and revaluation of gold or devaluation of the dollar. And then I watched it and I thought it was interesting. And I've been speaking a little bit about it. There's a lot of speculation. And before I start, I like to say, we're not saying this is going to happen. It's possible. And Rafi, before I let you explain how you see this possible revaluation, I just wanted to tell the viewers and Rafi as well that the dollar has been devalued because when you revalue gold, you devalue the dollar. It's been done 4 times in history. And the only reason I found out about the first time is because I got this book of United States coins. Uh, and if
Oh
you,
yeah, you're such a nerd. Wow.
yeah,
Okay.
if you go to the Gold Eagles, it says here that in 1838 they changed the weight and the composition of the dollar. So prior to 1838, 1 ounce was $19.38, and it was actually 22 carat. After that, it became 90%. 22 carat is 9167. So anyway, that was the first revaluation. Doesn't seem like a lot, but Rafi, percentage terms, guess how much it was?
From
1938, and then they revalued it to $20.67 in 1838,
it was like
and
5, 6%, something like that.
6.66.
Oh, okay. Is
So
this like a Freemason kind of thing again?
I don't know. I don't know. And then they revalued it again almost 100 years later. So it shows how stable money was for almost 100 years. It was at $20.67.
Mhm.
That's why it was such a big deal, I think, when Roosevelt revalued it to 35 in 1934. And then it stayed there till I've got the dates here, and I'm going to share it with you guys a second. I've got two articles from the New York Times. I think that's the only good thing the New York Times is for now, is for archives.
Yeah.
But this is from,
It's really such a trash paper now, like
yeah.
through
So
and
this
through.
gold price bill is sent to Nixon March 22nd, 1972. So it says here the House passed overwhelmingly and sent to President Nixon today the legislation formally reducing the international value of the dollar by raising the official gold price from $35 to 38. The vote on final passage after a relatively brief debate was the 342 to 43. So it does look like Congress has to approve this. And then that didn't really work out. So they had to do it again. And that was February 13th, about a year later, gold to be 42.22. Yeah, and it says again, United States announced tonight devaluation of dollar by 10%. And Rafi, just wanted to show you this chart before I let you chime in. So that's when they announced the first, well, the number three revaluation in history, March 72. Gold was already trading almost at $50, so they didn't even revalue to the market level. And notice how pretty much a month or two later, these are monthly bar charts, bars. gold started taking off. And I guess they realized, well, we didn't revalue it enough, so they revalued it again here on in February 73 to 42.22, and then it just took off. And we topped around almost 200 in December 74. It corrected, but to about 100,
Yeah,
and
it's
then
about a 50% correction. That's what we saw from 2011 to 2015, almost a 50% correction.
and then from here, it went to almost 900 in about, well, just under 4 years. Uh, what it seems to me, Rafi, if there's going to be a revaluation of gold or devaluation of the dollar, one thing, and it doesn't, I don't know what price they're going to pick. It will probably be a price that's below the market, or you never know, it could be where the international market price is. It seems that it puts a floor on gold and it's really bullish. So, with that, I want you to chime in and also talk about the other things that you think would happen if there were to be a revaluation, and what it really means. Because some people, and you explained this really well, some people don't understand that it's the dollar or the currency that's priced in gold. It's not gold really that's priced in dollars. Gold came first, right?
Yeah. Yeah, so I just want to make this clear before I start like philosophizing that I don't think this is going to happen. I don't think a revaluation, at least a statutory revaluation, is possible. There will be a revaluation of gold, which is really a devaluation of the dollar, which is really a devaluation of the debt, because the dollar, the real definition of a dollar is everything that's on the Fed's balance sheet, which includes the gold and the debt. So it's most you're not devaluing the gold that's on the balance sheet, you're devaluing the debt, and the value of the gold takes its place. That's what's happening here. Um, so I got an interesting WhatsApp from a businessman friend of mine in Israel, who understands money more than most businessmen. Like he's in the top 0.1% of monetary geniuses that understand what the monetary system is. And he's also a good businessman. It's very rare that you have that combination. So he said he probably watched the video and he sent me a message. Says, Rafi, like a revaluation of gold is impossible. It would instantly collapse all the banks, all the bullion banks. The monetary system would break down, and you'd have like an instant and crazy transfer of wealth from most of the population to very little of the population, and it would cause chaos. And I don't know to what degree he's correct, but to some degree he definitely is correct. I don't know how long it would take, whether it would take like minutes, hours, weeks, or months, but it wouldn't take more than a month or two if we, look at the charts of the devaluations from the 1970s, from 35 to 38 and then to 42. Each time it takes like a month or two, or maybe just a few weeks, because it's on the same monthly candle or bar, whatever it is. It would be very, very quick, and it would be quicker than could be handled by civil society. Um, so what he thinks is happening,
In the 70s, though.
yeah, yeah,
But
yeah. It happened in the 70s, but like look at the devaluations they did back then compared to what would have to be done now. I mean, we're still at 42.22, and the market price is like 50 times that. What is it? Is it 50 times?
six,
10,
7 times, I think, even.
So, okay, what it's like it's unfathomable compared to what this is. So a small revaluation from 35 to 38, relatively small. It's still very disruptive. And the biggest devaluation we had was from 2067 to 30 to 32 and then 35 in 1933 and 1934. And I showed in my video what it does to gold stocks, what it does to consumer prices. It's a very disturbing revaluation. And so what his hypothesis is that they're just trying to control the conversation, to get people to talk about the idea of a gold revaluation, just so that the idea that gold is money goes into our consciousness. Now, I don't know if he's right there. That's his theory. What I think actually happened, and I don't know if I'm right either. This is just what makes the most sense to me from the little evidence that I'm able to see, which isn't much. Like my view isn't that broad in terms of what happens behind closed doors or anything they're planning. But Scott Bessent, he doesn't seem to understand money itself that much. Um, so I think when he said to monetize the balance sheet of the U.S., I don't think he was talking about gold. I think he was talking about like just property of the federal government, like selling off buildings or maybe renting them out or selling national parks or developing land or something. I don't think he was talking about gold at all. I don't even think that was in his mind. But okay, maybe it was. I don't
It's,
see that
interrupt
as
you.
something that he
Sorry
was
to
actually thinking
interrupt you.
about.
Sorry to interrupt you. I listened to that comment he made, and he was in the Oval Office. He did say Treasury's assets, and then he also said the Treasury's liquid assets. So
Okay.
I don't know what I mean, I would consider the gold very liquid, uh,
Okay.
but anyway.
So maybe, look, I'm not saying it's impossible. I'm just, it seems very unlikely to me, but unlikelier things have happened this year and last year. So who knows? I'm just giving my thoughts on it. But in terms of what would happen, here's a good analogy, and it was just one that occurred to me this morning. Like, I pay my kids in silver dimes and quarters for chores that they do. And every so often, like we pay them shekels just so they have, the fiat liquidity if they want to buy something. Um, so that so like this morning, one of my daughters needed 10 shekels, and we only had like eight or seven or eight like little coins in the change purse. So like we had her go to my son who wasn't here, who has a few shekels, and take the shekels and then put notes in his little pouch. So he has a note and he has an IOU from his sister that she owes him Okay, fine. And then so I'm thinking like that is that part of his money supply? No, it's not part of his money supply. But like what? But then theoretically, he could trade that note with his sisters and like for whatever favor. Like you could, but then if that can't be paid back, you devalue that note to nothing and you throw it out. But that's what most of the dollar is. It's IOU notes. IOU notes of what? Of what, for God's sake? It's IOU notes of the original gold that the dollar started with. That's what it is. So that's where the dollar's most of its value is. It's in the IOU note that is still tethered to gold at 42. But in order to tether those IOU notes of gold at 42, you need, I think Phil Lowe, the Bitter Draft guy, who I do a show with once a month, he's like, you'd need more gold than exists in the solar system to satisfy all those claims at 42. So the devaluation from 42 to let's say 2,800 would be a massive devaluation of the debt. And all of these banks are stuffed with hundreds of billions of dollars of this crap, which the purchasing power of that debt would completely plummet. And what's so pathetic about the way the mainstream media, let's not even call them that. They're not even the mainstream media anymore. There's some kind of like a pimple or zit or tumor on the body of the real media now.
Yeah.
And saying, oh, well, if they devalue gold from 42 to 2,800, well, then the Treasury will have $700 billion to spend. Yeah, $700 billion that could get you a few packs of gum. It's it's ridiculous how they're even saying that. They don't even and the fact that we're even having this discussion, like imagine if there was even a discussion about the revaluation of oil to from 71 to like $800 a barrel or whatever it is. Like, why would we even be talking about this? What is the connection between oil and the dollar? Nothing except that you can trade one for the other, right? The link is between gold and oil, not the dollar and oil. The dollar is just the intermediary. So the reason the fact that we're even talking about revaluation of gold as if it is consequential in any way, like is itself an admission that the money is the gold, right? Why do you have to maintain this lie that gold is $42.22 on the balance sheet of the Fed? Like we all know it isn't. So why is it even like why should it even be consequential at all that you change a fictitious number to a real number? Why should that change anything other than the price of wedding rings if gold is not money? But it is because we're talking about this as if it's like this big consequential decision, which it is. But you can't say it's both consequential and that gold is just a metal.
What if they just scrap that statutory price and just, I think the ECB marks its gold to market and just say we're going to mark gold to market now. I guess that would probably, I mean, that would improve the Fed's balance sheet, and they could lend more to the Treasury, and I think that's what they're looking to do, because right now it's only worth about I think 12 is it 12 billion that gold, the 8,133 tons. I don't know, or maybe Rafi, they haven't worked it out like we have or you have, that by revaluing the statutory price would be disastrous. They might do it and create havoc.
Yeah, well, okay, so the ECB is a different case. The ECB is not it controls a currency that is not the reserve currency. The dollar was set up as the reserve currency post World War II, thanks to I think Russia was a big part of it because they had all these dollars. So the ECB, the value of the euro is less dependent on the gold that it has, and much more dependent on the value of the dollar, which is dependent on the gold that the Fed has, right? The ECB's gold is just it's more of it's not a backing to the euro. It's more of it's a liquid asset that they have separate to their own monetary system because their monetary system is based on the dollar from way back from
Yeah.
the post World War II era, and the regression principle or the regression theorem, it's not just, going back, to what the gold dollar exchange rate is. It's going back to like all the collective economic links that existed back then and that have evolved since, all the way down to retail level. I mean, obviously, like just like evolution and microevolution is a process of every mating, every sexual relation that has happened, in every species going back from the beginning of time to now. So too, like the regression principle is a collection of every economic transaction leading up to where we are right now and why we're transacting the way we are. It's linked to everything. So the ECB can mark its gold to market without affecting the main global monetary system, which is based on the dollar's marking to gold, not the euros.
Yeah, no, that's a good point. So, what do you think is going on? Because all, we're seeing the lease rates go up massively in London. I saw yesterday the lease rate for GLD gold, for borrowing GLD and getting the gold out of GLD, and you need 10,000 shares. So it's for big institutional holders. That jumped yesterday from like 4% to 11%. It reminded me of the LIBOR back in 2008 when that spiked, and also reminded me of the repo crisis in 2019. What do you think is going on? Why so much physical gold is going to the U.S.?
I don't know. I've been I've been trying to figure this. I think I asked you this question in one of the interviews that I have with you, and you get like there are answers, but obviously there is an answer, but in order to like find what it is, you have to like figure out the financial situations of all these actors that are borrowing these shares and what exactly they need and what are their counterparty people demanding and why do they need the gold from the why is it going to New York? Why is gold cheaper in London and more expensive in New York? And I don't have a satisfying answer for it other than to just say generally, when the monetary system is under stress, like everything goes into the core. It's like when your body is under stress and it's trying and you have hypothermia, right? So like your blood comes out of your extremities and goes into your core to keep your main organs warm, and then your hands are freezing and you're shaking. But so if the monetary system is under threat, then if you can take from biology, just like we do with evolution, like the monetary liquidity, the strength, the warmth is going to go out of the extremities and go back into the core, which is in New York and not in London anymore, right? Since post World War II, and America conquered the world basically, so when the monetary system is under stress, we should expect the gold to go towards the core. It's like the gold is the blood, it's not the dollar, and it's gonna try to insulate the dollar, which is the derivative liquidity that most people use. So I know that's not exactly an answer, but it is a biological analogy that I think is accurate. I just don't know exactly why. Um, so about the borrowing from GLD, if I were a bank and I had obligations to make deliveries, then and I didn't have it, then I would borrow GLD, make the delivery, and then hope I can buy back GLD at a cheaper price. And then not only like it's I would be able to make the delivery and then buy it back and then profit on the short, or at least break even and get rid of my obligations. So I think that's what's happening. Somebody has to make a delivery. They don't have the gold, so they're using GLD. And I don't know if I pointed this out last time, but in 2020 the ETF holdings were like they were skyrocketing, both GLD and SLV. As the gold was flowing into New York, the holdings of the main ETFs were just like going vertical. So that's where the gold was going. So this time the like GLD is like meandering up and down as gold goes up and up and up. So I think that demand for GLD, I think it is increasing. This is my theory, but it's being counteracted by redemptions from people who want the physical, which we didn't see last time because at that point probably London did have enough liquidity to supply it, and this time they're getting kind of low, so they have to take from GLD also, which is why we're kind of seeing a choppy action in the holdings there. We'll see who the weakest link is by whatever bullion bank goes broke first, whether that's going to be now or in a few weeks or a few months. These indicators in the ETF, the borrowing fees, I think which went to like 10% or 10.4% yesterday. I just started following this. Like it's a new thing to me. They went to 10.4%. That doesn't happen, just on because the wind is blowing a certain way. It's happening because of a sustained demand for gold. Where it's coming from, I don't know, but we'll find out when the first bank falls.
You spoke about like the gold going back to New York, the center of the monetary system. And in your videos, you have a little cartoon at the end where you're smashing the John Exter's pyramid.
Yeah.
So, and John Exter's pyramid is he says that eventually the system, the fiat currency system or the dollar system will collapse, and all the liquidity from the pyramid will flow down to gold.
Mhm.
So, could that this possibly be what's happened, you think, or are we jumping the gun?
No, no, that process is always happening. Um, it's always happening in principle. Like when the bubble pops, when it starts to pop or deflate, that's the purchasing power going into gold. Like in during that time in those few weeks in 2020 when gold was going down from I think 1700 to 1450 and gold was crashing, it wasn't. Its purchasing power was skyrocketing because the value of everything else in dollars was like crashing like 5 times as fast as gold was. So
Yeah.
that was the transfer of purchasing power from the higher derivative layers into gold, except the bubble was reflated again, and reflating the bubble takes the purchasing power out of gold. Even if the dollar value is going up, it takes the purchasing power out of gold and reflates the top levels of the pyramid, right? So instead of seeing it as like this rock solid pyramid, or you could see it as like, let's say, a pyramidal bubble with a solid gold base, and then the air goes into the upper layers and makes the upper layers even bigger. So the purchasing power seems to be in them. And in any given time when people will trade liquidity for the different layers, you can get that purchasing power, but it's ephemeral and it's based on an illusion that everyone has it, where only a few people have it. And when nobody has it in the upper levels, it all goes down to the bottom.
Yeah, I've noticed, and I haven't got the charts, but I've shown them a few times. If you do, let's say, the 10-year Treasury price versus gold, gold's taking off. The Dow Gold ratio is dropping through around 15 at some key levels.
Mhm.
And I think that's going to continue. So, do you think the policy of the U.S. is to just let the market naturally devalue the dollar and let gold go higher? Or do you think they also need maybe they need the physical gold because they want to sit down with the Russians and the Chinese? And it doesn't sound outlandish anymore because Marco Rubio did an interview with Megyn Kelly a few weeks ago, Secretary of State, and he said we're not in a unipolar world anymore. We have to respect other powers. He said we're in a multipolar world, and seeing that the BRICS are buying so much gold, the Americans are saying, well, we got to bring back or unencumber a lot of the gold that we have because we might need to sit down with the Russians and the Chinese to to kind of stabilize the monetary system. I don't know what you think
Right.
about that.
So your basic question is the US government buying gold and is that why it's going up in whatever way they're doing it? It could be. I really don't know. Like I don't have like a complicated, four-dimensional chess political monetary mind in terms of like, this geopolitics. That's not the strength of my brain. I'm more of the upper ether concept
Hmm.
guy. But it's possible that the U.S. government is buying gold on the insistence of the Trump administration, and how would that fit in? I mean, if Trump is sending Musk to like respond positively to these audit requests, then maybe Trump has been buying the gold and say, okay, now we have the tons that unencumbered tons, and now you can do the audit and you can make it public and let the whole country see counting the bars and whatever he's going to do. It could be that he's buying it. In terms of what do I think the policy will be just hands off and let the market restructure. I think that is the ideal that they want to emulate or they want to follow that path, but they won't be able to. They will be able to a point because they want to do that because that's the principle, like let the markets work itself out. That's Trump's philosophy. And that will continue until there's a serious problem, right? When the banks start to fall, Trump is not going to be okay, well, let's just let them fall. It's possible. But I don't see that happening. What he'll let the market work itself out until it works itself out too much, and then he'll stop it.
Yeah,
And at that point, the devaluation of the dollar, the revaluation of gold will go from, oh, is it going to be statutory? Is Trump just going to do that? It will be like, well, the market itself is going to say, well, if you're not going to do it statutorily, we're going to do it right now. Just ba'af of like whether you like it or not, basically. And that'll be the hyperinflation, which is the same thing as the devaluation, which is no matter what you call it, no matter what the dollar value is, it's really the relationship of gold to every other asset. And when all of the purchasing power gets vacuumed out to the maximum extent of every other asset and vacuums into maximally gold and silver at a 15-to-1 ratio, when silver hits a 15-to-1, we're there. It's done. And then we can start redistributing the money. So that's meaning whatever you call it, hyperinflation, hyperdeflation, revaluation, devaluation, it's all different ways to describe the same process and the same end game.
yeah. And just to let the viewers know before we wrap up, uh, if you already have gold and silver, and hopefully you do, I think it's more important than ever to keep it safe. Rafi is also he promotes Dirty Men Safe. So yeah, check out Dirty Men Safe. There's a link below in the description. You get a 10% discount for Dirty Men Safe. Rafi, what any final words for the viewers? What they should be focusing on right now with all this kind of there's so much happening right now.
Yeah, yeah. Okay. So
Yeah,
what I would say is don't get too hopeful about politics. And believe me, I'm so excited about what's happening now. I'm excited about what Trump's doing. I'm really excited about RFK. I'm super excited about Tulsi Gabbard and dismantling as much as we can of the deep state. That's all great stuff, but it's not going to stop the end game no matter how good they are. It's just not. So maintain, I'd say don't be black pill. Don't say, oh, they can't do anything and they're just part of the deep state and this is all a 17-dimensional chess and they're just trying to take over. Don't think like that because that's just going to make you not do anything and not improve your situation and it's going to depress you. And I can't stand people like that. I can't be around them. I can't talk to them because I cannot be in that mental state. Maintain your hope. and you should like the way I see the Trump administration now is as like not a savior of the people, but they're packing away what they can, whatever they can salvage. You know, free speech is a value. That's a huge one. If they're buying gold, they're trying to save what they can of the dollar. That's also big. But they're not going to stop the end game. What they can do is pack up as much as they can to rebuild afterwards. And meanwhile, what you have to do is you got to keep stacking yourself, maintaining skills, honing skills, getting connections, and staying positive and relying on God because none of us can control even the tiniest amount of what's about to happen. All we can do is just hope that God will bring us through it calmly and as calmly as possible. And God brought us through Corona, and now that I see what's happening politically, I see like all that suffering that we went through in the early 2020s. None of this would be happening. None of these positive stuff would be happening if not for that hellhole back then.
I agree. Well said, Rafi. And with that, I'm going to wish you a great day and to the viewers as well. And yeah, I'll talk to you later.
You too.